Hello friends, I'm looking at Nifty's weekly chart, and in this video I'm going to talk about the actually technical structure of Nifty and in the global turmoil scenario, what all is possible, what kind of levels we can look at in coming few weeks. So listen carefully because that will lead to profitable trades in next few days. So that is what my intention is to help you in making money. So Nifty, as you look at it, there's a big red candle, and it was like one side move. And if you look at for percentage fall, it was like 4.45% for the week, which is huge. So now we are right close to 25,000 as a support, which is a round figure support. So 2014 is where it has closed, and it is very close to the Fibonacci support level of 24,703. So looking at the movement, I think momentum we can hit 24,703, and that looks a distinct possibility because the global news flow is going to actually drive the sentiment, and that can be purely bearish, very bearish, or it can be neutral at the current moment. So far, I think Israel is. I was going through some news article, and it was actually indicating that Israel is firm on giving a strong response, despite the fact that US has indicated that it should not attack nuclear infrastructure of Iran. So if that is the case, then they may attack oil infrastructure, and if that happens, then I think oil can be on boil. So if you look at it, oil is at around 75, 76, I think, and it can come up further if the situation continues or worsens. So if it starts staying above say $80 per barrel, then I think we can have some issue because then it's going to be bad for Indian economy. So as long as oil stays below $80 per barrel, I think we may not react adversely. But the moment we see a possibility of the turmoil increasing, we can see a downward move, downward shift move. So in that scenario, 24,700 for Nifty and even below levels, if this look at the average support is 24,441, all those levels can be touched, wherein some buying support can come in. But unless and until this global turmoil is cleared up, I think we may not see a sustainable rally. So tomorrow, all eyes would be on where the Nifty opens, and if Nifty for some reason opens up and it moves towards say 25,500, we can see some selling pressure around that level because the global situation is still not clear. So in that scenario, you can actually hedge your portfolio with put options. So I think 24, 800, 700 kind of options, put options you can look at. Friday's close was for 24 700. It was around 70, and for 24 800 it was around 90. So these two options you can look at using them for hedging, and if you hedge with that, then I think if it really cracks, you will be protected. So extent of hedging is actually up to you. The other thing that you can do is you can actually create a bear put spread using say 25,000 as a put, and then selling say 24,500 put. So that those things you can do if you think it can, if you don't want to actually go all out with a bearish view. So that kind of spread you can do. On the upside, it's likely to face resistance at around 25,500. So that level is going to be critical. After that, 26,000. So if it for some reason opens up to tomorrow and gains further around, then around 25,500. There, if you see some selling happening, then there you can actually add a put option at that level, and or you can sell 26,000 call once it is at around say 25,500. Nifty index at 25,500. So that kind of action you can take. So if you are a long-term investor, I think nothing much has changed. So in that scenario, we are already close to 24,000. If it comes to say 24,500 kind of level, you should be actually buying some leading fundamentally sound stocks to the extent you want, and hold it for a longer term. So that's the view for the time being. If you like this clear crisp views, then do subscribe to my channel, and hit the notification button. Share this video with your network. So that's about it for the time being, and I'll meet you in next week's video in next week. Thank you.